Boom! What's up, everybody? Spencer Israel, Stock Market TV. Jeff Macke from Macke's Retail Roundup. Jeff, let's talk retail, shall we? We got a few things going on in your neck of the woods.
It's always exciting. Happy Prime Day to you and yours and the new baby. I mean, I know it's its first holiday, right? I mean, it's one of the happiest of the year. It's something for everyone. Yeah, and Tariff Madness, of course. It's been so far we're kind of responding pretty well to all the above. It's supposed to be a slow week. I'm supposed to be enjoying the Tour de France, Spencer, but we've got just damn much news and too
All
much to
right,
talk
we
about.
will talk about Prime Day in a second, but first, let's just get the lay of the land. This is the XLY, the Consumer Discretionary ETF. I would say probably the broadest ETF that describes your universe here. Uh, so,
Yeah,
so
yeah,
yeah,
we've gone
so
back.
we're below the highs, but like not that much below the highs, right?
Not that much below. It's kind of it's a deal or no. We priced in some really, really harrowing, terrible stuff. We've taken down estimates quite a bit, and Trump just restarted the trade war. We kind of talked about it last week with July 9th hanging out there. Well, we moved that to August 1st, and then just sent out a bunch of really strangely worded letters with a lot of caps where you normally don't see caps and a lot of threats where you normally see conversation. But hey, that's how this guy rolls, and the market's used to it now. So
That's how they roll.
it makes it hard to buy new highs with this. The consumer's obviously still lagging behind, but considering the stocks, the winners anyway, have acted like champions. What we haven't seen yet, though, Bangladesh, China, and the Vietnamese deal, I would like to see some clarity on that. That's what's going to matter for shoes and clothes. I was at Walmart yesterday just because that's what I do. Yeah, it's you kind of most of the items that you find that are really cheap are going to be from one of those three. Most of the shoes are produced, if not finished, or get finished in Vietnam, but you're taking raw products from China. So we really need a sweeping deal that applies to textiles. But in lieu of that, you have to assume there's going to be tough talk with that, right? People not pricing in like Trump's going to say something crazy to open the conversation are probably going to be surprised at the downside. But in the meantime, waiting on those deals, the stocks are acting pretty well.
See, this is the insight that I need because I don't know what is made where, but you know that shoes and apparel are made in China, Bangladesh, and Vietnam. So now we can easily find a list of shoe and apparel stocks to watch. We will, and we'll have to keep an eye on those every time we get a headline as it pertains
And
to.
Vietnam is really big. Like that was encouraging to see the needle move. If you're not going to announce one definitive deal during your 90-day pause, not one single one, which was slightly less than the 200 we were promised, it's where you'd really want to be kind of suggesting there was a framework would be Vietnam, because again, it's they're finishing goods there. And really, most of the companies that are producing there were incented to go there as an alternative to China back in the first Trump administration. So there's a lot of what the hell is going on there from the retail execs. But it's an important cog in this process. I'd like to see a carve out, but again, the stocks are just kind of shrugging it off, which is in sharp contrast to April, man.
All right, so these three apparel stocks: Victoria's Secret, Gap, and Nike.
Yeah, kind of a basket. Pick it. They
Yeah.
have varying exposure. Gap is incredibly well diversified. Nike is a shoe company, usually dependent on Vietnam and China, and Victoria's Secret has just massive China exposure. Neither one of them, they all got hit a little bit, but not so much. Victoria's not going to let this like ruin her Hamptons experience. She's fine. She's fine. It's fine.
Okay, yeah. Tariff madness is what we're calling this, right? So this was the panic from April. Double digit declines for Victoria and Nike. Not so much this time around.
A
So
huge contrast, and really, given that the numbers were pretty similar to what we saw in a lot of cases on the Liberation Day, at least what's published so far, there's a lot of chest thumping, a lot of additional kind of brick pressure, but again, it's the market's kind of chill about it. We've taken down expectations, and it's just things aren't as bad as they were. Mostly, the consumer didn't die. What mostly happened was the delays allowed the stores to get in stock, and the consumer, for whatever they're bitching about to the polls, to the economists, it's they're out there shopping, they're doing stuff.
all right. What is the bull case here for
The bull case is
for any company with tariff exposure?
Okay, so it's going to vary by in terms of the leverage they have. The way this is going to play out, first of all, the foreign countries are not paying a dime of this. I mean, that's just bonkers. It's the importers who are. But that said, this is really just a way for the companies to kind of renegotiate with everyone they have manufacturing in Vietnam. So Target goes to Vietnam and they say, I don't know if you guys noticed. You probably didn't. It's probably just an aside. I might not even have to mention it. Our president's a little erratic and he wants us to pay 50% tariffs. We're going to jam some of that onto you guys, and you come up with some sort of split. Now, if you're Walmart has a 60-year tradition of jamming every expense onto vendors, so they give zero craps about it. They're just like, yeah, we're not picking the tab up. These guys are, the vendor is. Less authority there for coming to some of the smaller players, but it's going to be some mix. The prices aren't going to go straight to the consumer. The corporations have done generally a pretty good job with what they're calling kind of mitigating strategies. That Gap uses the phrase mitigation strategies maybe half a dozen times in their conference call. That just means they're going to jam the vendors. They're going to go to their suppliers and say, we're splitting the expense on this. That's fine. But, more importantly, we saw a lot of those estimates come down. We saw guidance just completely yanked, and we quantified over the course of last earnings season, which we covered in great depth here at our little corner of the world, what the expectations are. And they were very low. And so we've already seen Aritzia, a company that I didn't make a chart for, but I mentioned it obviously a lot. They were the first company I've seen upgraded so far, where an analyst came out and said, the delays allowed them to get their quarter put together. It allowed them to get the rest of the year. If you're going out to August 1st, the retailers really are going to be able to be in stock for Christmas. Now, it's going to raise their expenses, not just because of the tariff, but because of the timing. Right now, with that August 1st deadline apparently firm, Christmas orders are coming in, get it off the ship. We want to pay when, before the higher rates start kicking in. But that's good enough for them. Now, chasing goods, which is refilling kind of hot orders, which is really where a company like Target, if they sell out of something really early in the holiday season, they'd like to be able to reorder it. That's going to be much more expensive. So this is going to hammer profits pretty good in the back half. But, it's quantifiable and that's good enough.
All right, shout out Aritzia for Lazy Beats in the chat there.
Yeah, the pride of Canada taking over from Lulu. It's Canada always has like one good retailer. It's Canadian Goose. It's Lulu. It's they're not so dumb up there. They're sharper than they think.
Is what you're saying. They can only have one at a time.
Well, it's a small country.
Yeah. All right. 3 things to watch going forward. What's on this list here?
Prime Day results. We'll get to that in a second. Yep. We need deals, we need rates, and we need those big three. And so really until we hear kind of Bangladesh and China get at least, a tentative thing, China's been somewhat conciliatory. They're the rational ones, which is cool that someone is. Strange negotiation, but, we need rates that are, they're already going to be high, but we can't have it what amounts to just essentially an embargo where you have product just floating out in the Pacific because it's too damn expensive to bring on shore, which is where we were when we were at like 140% or whatever it was. I mean, to get those rates, and it's just not economic to really bring any product in. Anything better than that, anything sort of, resembling the 20% that's sort of priced in right here, we could see a rally, at least in some of the better ones. And that's good enough. What I'd love to see, and not a ton of nuance out of DC these days, but is a carve out. There was the deal with Japan yesterday. Japan makes pharmaceuticals, they make baby food, they make a lot of stuff that is kind of nice to be producing in your country. That I can see the logic of that. The $5 t-shirts I was looking at Walmart yesterday that are made in China, I don't think that's an industry we necessarily want back. If they're able to produce a t-shirt that Walmart can sell at a profit for $5 after shipping and expense and everything else, that would, that's great. Godspeed, terrific. And I don't really see the security risk in the event of a war with China. We are not, in fact, going to go naked as a nation, but it will be nice to have pharmaceuticals.
And baby food, no doubt. Okay. Who are maybe aside from Aritzia, who do you have as sort of the winners of this tariff situation right now?
And this is kind of in the context of Liberation Day, but also, the economy didn't come to a screeching halt. And you saw some of these companies we've talked a lot about, but Starbucks and Uber are just going to 100. That's just what's going to happen. It just is. It's Starbucks is not really, they've already talked about kind of minimizing their exposure directly through the Chinese stores. Brian Nichols still in the honeymoon phase and doing the right things that he should be doing as a turnaround guy. Uber is just, if people are out there traveling, which they are, Americans are picking up the slacks, they're landing last minute trips, they're getting involved. They're doing great. And again, I hate to harp on this. I'm going to have a longer piece for our subscribing members about trades that have been making in this space, but the cruise industry continues to just be stunning. In the last week, we've had a guy fall off a Disney ship to rescue his kid. Right. That's a bad thing. And Disney comes out and they say, it only took a few minutes for our boats to get out there and rescue him. It's really a sign of just how safe these cruises are. You're a new dad. I've been up that mountain. You know what you're not doing? You're not throwing your kid off the fourth deck of a cruise ship, Spencer. That is not, in fact, a sign that the cruise ship is safe. It doesn't matter. The Poop Cruise on Netflix, I highly recommend.
I haven't gotten around to that yet. It's on my watch list. I haven't gotten there yet. I will watch it.
It doesn't matter. And a woman died in Alaska. Just went for a little hike off a cruise, and then they lost her. It doesn't matter at all. Doesn't matter at all. Americans love to cruise. It's seriously, Rose Dawson, shortly after losing Jack on the Titanic, she went on another cruise. I bet she cruised back to England. I bet that's the first thing she did. We've got some tough memories here, but I really enjoyed it.
So Uber, Starbucks cruises, all great. What is this?
This is a little piece of news that might have fallen under the radar of anyone who's not Gen X or 7. Chuck E. Cheese, the animatronic arcade company, has a whole new concept called Chuck's Games. But what's interesting here is another company that we have talked about, Dave & Buster's. Now, Chuck E. Cheese went bankrupt in 2020. They're owned by private equity, still a big operator. Dave & Buster's is kind of a struggling small cap, super cheap for a reason, but about a zillion of these, the arcades. It's a bar and an arcade. It's a super weird combination for a business model, but they have 500 of them. The stock has been screaming higher. Chuck E. Cheese is still much larger, and Dave & Buster's would make an outstanding acquisition target. It's all a play on mall traffic. Without mall traffic, no private equity group is going to want a chunk of any of these things because they're all just kind of levered up plays on they get a certain level of traffic, they're going to get a certain yield, and they're going to be able to pay the debt, and it's a great investment. But during COVID, for instance, and during the initial stages of what was thought to be recessionary trade warring, the stock was murdered. And in the last month or two, it's actually doubled. This could be the reason why. Keep your eye on Dave & Buster's. It's interesting from a consumer tell. It's also just interesting as a stock story. And for Gen X, man, this is where we grew up. Just playing pole position in some Chuck E. Cheese, man. That was, you could probably find a young Jeff Macke there sporting a cool mullet back in the 80s, maybe jamming to some Van Halen and playing Punch Out in pole position over and over.
You just said that Chuck E. Cheese is way larger than Dave & Buster's, and I had to look it up. But you're actually right. I can't believe it. According to AI, which is never wrong, there's 468 Chuck E. Cheeses in the U.S. and only 176 Dave & Buster's.
And
I would have guessed it would have been reversed, but what do I know?
Would have guessed that as arcades, there was maybe 5 of each of these. I started looking at them about 18 months ago, just because it's holy crap, they still exist. Yep. And the comps at Dave & Buster's have not been terrific, but in fact, they're not good at all. But they're one of those public companies that is still pretending to be a growth operation, way beyond the time that you should pretend your arcade's a growth operation. They're better, smaller, leaner, a lot of low-hanging fruit to private equity to come in there if they feel like the business model works. Wow. If you look at the ads, and I just would recommend, if only for the acid flashback qualities of seeing sort of the Chuck E. Cheese animatronic action figures in real life again, check out the commercials, the ad space. Really, Chuck E. Cheese is doing the exact same business model. It's just arcade for grown-ups. Hey, come and party, as if Dave & Buster's doesn't even exist. They're the same company, near as I can tell. The merger makes too much sense not to happen.
Dave and Buster's is still worth $1 billion. So it's a small cap, but it's a billion's a billion, right? All right.
Half a billion was what it was worth a month and a half ago. So
That's
yeah, I
true.
mean,
That's
it's
true.
not as cheap as it was, but it's still not super expensive if you look at it just in terms of cash flow and what they're getting. Now, again, it's been an eroding asset for a while. Management is not hugely respected, which is a polite way of putting it, but I'll continue to be polite because I'm just a nice guy,
All
really,
right.
deep down.
Enough about arcades, enough about tariffs. Tariffs are boring. Let's talk about Jeff's favorite day of the year, which is actually today and tomorrow and the next day because it's Amazon
And the
Prime
day
Day.
after,
And the day after, right?
it's 4 days of, I mean, it's half as long as Hanukkah. It's 4 times longer than Christmas. This is the most exciting event. And really, I think Jeff Bezos is kind of, it'll be his legacy, is the invention of summer Christmas, or Prime Day, as he called it. It's huge. It's 2/3 the size of the sales that you get from Thanksgiving through Cyber Monday, which to me is just stunning. Because to say it was counterintuitive to want to run a big, huge promotional retail event this time of year, a little early for back to school, a little late for buying swimsuits. This is a kind of quiet time in the retail cycle. Amazon started this thing 10 years ago. It's $25 billion to $30 billion now. Target's running it. Walmart's running it. The entire planet is sort of doing these deals. It works really well for reasons I wrote about in the newsletter yesterday. People click on the site and we can break it down more. Now it's huge. It's a big deal, and you know the bargains are kind of good. Target traditionally gives away what amounts to free money. You can buy cash cards at a discount. So you know there's a nice little arbitrage opportunity for you Target enthusiasts. The 10 of you that are left out in the world, but you know it's become a legit big deal type of thing. Amazon is still actually gaining share in this, which is crazy given how much Target and Walmart has spent trying to catch up. But as big as it's gotten, because they do third-party goods, because Amazon doesn't really have that inventory risk, they're doing almost half of what they sell over the next 4 days will be from outside vendors who are facing their own tariff problems that Amazon just doesn't have to deal with. It's like, well, you know, you better have same-day shipping if you have these huge expenses, or else no one's going to buy your crap. So, you know, crap sold, man. But you're actually seeing an effect. That's why I was at Target and Walmart yesterday. It's not just because I'm a weirdo, but, you know, I saw a dad buying a bike for his kid at Walmart yesterday. I got a little teary. I was like, this is nice. It's nice to have invented a holiday and people are kind of acting on it.
You said that Amazon's still getting share. I think that reminds me of, I guess it was a couple of years ago when they were being sued by either the FTC or the DOJ or whomever on antitrust grounds. And the argument from Amazon was, we're not a monopoly because, sure, we have a large share of the e-commerce market, but we have a very small share of the total retail market. Is that what you're saying here, essentially?
um, yeah, it's you mean which side of that argument am I taking? I think they could go after Amazon for all sorts of different antitrust thing. You know, it's they're in the retail war and they're selling arms to both sides by being the supply chain for who would ostensibly be their competition. So that's a really, really nice position to be in. Some would call it unfair, but then again, if Amazon was smart enough and good enough to effectively just invent its own mail system, which is what they did over the last 15 years, which is bonkers. The idea that FedEx and UPS would not benefit really at all from online shopping going from like nothing to several $trillion a year to 20% of retail sales, and the primary shipping companies don't get anything from that. That's incredible. You know, it's so. I mean, it's they can be sued for antitrust for on the retail side, on the shipping side, on pretty much any way you want to, or we can just respect them as an American company and celebrate summer Christmas.
So, is there a trade to be made here around Prime Day for Amazon, or?
You know, you want to watch the sales. It's too big to ignore in terms of economic tell. I always say I want to see what the store's results are more than I want to see a survey, more than I want to see government data. And this is a really good litmus test because the only companies that are really leaning hard into it are going to be the big McGillis. It's going to be Walmart, Target, Amazon, still kind of respectable companies. And so the results will matter a little bit. Now, expect them to be drawn out. The early returns are not great. And yes, this event to the dorks like me, it matters enough that by 8 this morning, we were getting early returns on how Amazon's doing, down 14% or something like that. hard to ululate about that when they made it 50% longer as an event and are really kind of hyping it less. Interesting also that if they did a search on the pricing, and actually prices have gone up. So despite the counter propaganda of no inflation resulting from the tariffs, not so much. Even with the discounts, the prices are a little higher than they were a year ago. But again, at prices these low, Spencer, you can't afford not to take part in Prime Day celebrations.
So this will be a good litmus test to see really how the consumer is dealing with tariffs.
The conventional wisdom is still that the consumer is going to spend less, that they're going to be paranoid. The actual rational response to an August 1st deadline would be to hoard. I don't know about you, but you should be piling up baby diapers. You should be walling your house with them. I don't want to encourage reckless behavior. I'm just saying sometimes hoarding's appropriate.
I'm going to get on Amazon right on the app right now, and I'm going to buy some more size 1 diapers because that's what we need. Boom. Okay, great. Thank you for the insight as always, Jeff Macke. Everybody, if you want to get his free research, sent out a good note yesterday on Amazon. That's the first link in the description. The second link is to join his retail roundup. You actually get access to Jeff's portfolio, see which stocks he owns, see what he's buying, see what he's selling, and see which stocks he's going to buy or he wants to buy. Right, the stocks on his watch list. So those 2 links, both in the description. Jeff, we'll see you for your weekly members only video on Thursday. And other than that, we'll see you next week, and we'll have to talk about the results of Prime Day or Prime Week.
Absolutely, my friend. Enjoy.
All right, see you guys.